Hello everyone. Unlocking NIO Success. Leaked insights hint at soaring revenues, strategic alliances, and cautious optimism amidst infrastructure investments. Stay tuned for an exciting earnings report. Friends, we receive information about NIO earnings leaks, and you might be wondering where this information comes from. Well, it usually stems from the regular face-to-face meetings held by NIO, where the company owners get a chance to visit NIO House. During these meetings, NIO CEO or president is present to answer questions and provide updates on the company current status. These meetings are crucial, especially because at the beginning of this year, NIO CEO had announced that R&D expenses would increase by approximately 30% for the year. In the early stages, the NIO owners were informed about this, and indeed, R&D expenses have increased significantly, ranging from 40% to 60%, according to quarterly reports. Recently, there was another such meeting in Chongqing, where the locals disclosed details about the meeting, events, and all the important information. Here comes the first exciting news. There has been a substantial increase in revenue, which is quite promising. Their deliveries have been excellent, and I will estimate the revenue shortly with my expectations for the upcoming earnings. There are also some other interesting facts. Quoting the CEO, he mentioned that there has been a significant increase in revenue, which is excellent news. This is quite evident. You see, the 3 months were exceptional: July, August, and September. The deliveries were outstanding during these months, and this will be the best quarterly report we have seen. There will be a substantial increase in revenue, and it will be excellent. He also mentioned a rapid improvement in profit margins, which is another positive development. How much bounce can we expect? I believe that the profit margin could potentially reach double digits. Again, this could be highly lucrative. I'll soon discuss some factors that could impact the margin. But first, let's estimate the revenue. In Q3, deliveries were 55,432, marking a 75.4% increase year over year. Now, if we take the average revenue per vehicle from Q2 and apply it to the number of vehicles sold in Q3, we get 2,881 billion USD. This is a revenue estimate. However, if we increase Q3 2022 revenue by the 75.4% increase in deliveries, we get 3,205 billion USD. So we could see anywhere between 2.8 to over 3 billion US dollars, perhaps even higher, which looks very promising. Now I must note that comparing Q3 and Q2 delivery makeup is quite different, and during Q2, towards the end, they offered a price adjustment, or not exactly a price cut, but they gave you the opportunity to add an extra 30,000 RMB during that period to get free battery swaps, and this represents additional revenue for NIO. Keeping this in mind, looking at Q2 numbers, most deliveries were ET5, and I hope for those vehicles, the number would be an absolute minimum of 2.8 billion. Without saying that this will lead to a profit, I still hope that NIO will remain in the red, meaning it won't make a profit. This is my personal opinion. However, I think the loss will be significantly reduced, and there will be a good increase. One significant caveat that is genuinely hindering profit making, and this is something I believe everyone should know, is the infrastructure they have deployed. Actually, around Q3, at the beginning of Q3, they had 2 factories that were rapidly producing swap stations and charging stations. They were deploying almost 4 charging stations and roughly the same number of swap stations every day. However, you can imagine how much money goes into this, and then there's the additional spending on research and development. So they are investing a significant amount of money, which incurs expenses. On paper, it may seem like a loss, but in reality, they are investing in infrastructure, which is quite commendable. Many people may think that NIO infrastructure is not that extensive, but it's actually substantial. NIO has 2,300 swap stations. On paper, this might not sound like a lot, but you can imagine, for an average NIO user, NIO has a vast infrastructure. It's all about the money. Now, I think many investors might have assumed that the earnings would be fantastic, but people are waiting to see what the guidance for Q4 will be. The Q4 guidance may not look as promising because it's obvious that deliveries won't be as high compared to Q3, and this could be a bit challenging for some investors. Another thing they might discuss is their partnerships with several other companies. I've come across some leaked conversations, and it seems that with these swap stations, NIO will only be contributing a part, and other companies will also be pitching in. So in the future, this could prove helpful in reducing cash burn. But I hope the CEO clarifies what they will gain from this deal in terms of implications. And friends, NIO current strategy is to establish dominance in energy and utilize existing electric capacity, because in many places you're only allowed to have a certain number of chargers or electricity facilities. This is the maximum capacity that the grid can provide to that area. So if you place your chargers there, it means you've used up that capacity. Then if someone else wants to build swap stations or charging stations there, it becomes very difficult. Now, a possible black swan event could be related to the factory. As you know, JC has sold the factory, and in collaboration with Huawei, NIO essentially has to buy back that factory for $600 million. This will be a significant expense for NIO. We'll have to see how this entire situation unfolds and what NIO cash situation will be. I am quite confident that NIO knows the limits of its resources, so they won't overspend if they know they can't afford it. Like infrastructure, if they think they will run out of money, they will certainly slow down infrastructure deployment. But it seems that the management is quite optimistic about the future. So we'll have to see how the earnings report turns out. The leaked insights into NIO Success reveal an upward trajectory in revenues, strategic alliances, and careful optimism amidst substantial infrastructure investments. Key meetings unveiled a forecasted 30% rise in R&D expenses, already reflected in a significant 40% to 60% increase according to recent reports. Chongqing meeting disclosed remarkable revenue growth, primarily driven by outstanding deliveries in July, August, and September. Anticipated earnings could potentially exceed $3 billion, a testament to NIO thriving performance. However, infrastructure investments pose challenges, despite promising collaborations to mitigate cash burn. NIO cautious approach towards resource management hints at a balanced expansion strategy despite potential expenses, making their upcoming earnings report a pivotal indicator of their financial standing and future direction. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.